All right, welcome in, ladies and gentlemen. We got us a down day, but it was a lot uglier than it is now. Rah, 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 rah. All right. So very interesting. We have not drawn our big green monster. Why don't we do that? Let's go see what the big green monster looks like. So let's delete this and let's see if we can do it. Oh, wow, look. We had 2 big months of movement, and then look at April, y'all. April was just nothing. So let's draw from the bottom to the top. I'll do it quickly. I ain't giving y'all class on it right now. I'm just drawing. So here, the high was 41.98.25, 41.98.25. And low is 40.68.75. You know what would be fun? If we just traded, like I started another account up and we just traded based on the green monster. Now, how about that? Wouldn't that be fun? Oh, wow, look at this. So our line, 50% line is running right dab slap in the middle of where that line is. So there's really nothing to do. You just kind of go, okay, it's done. Let's go edit properties. We'll call this April for May. And we'll make it all green. Oh. Finally getting the feeling back in my mouth after my dental appointment today. And look, let me show you my new teeth. Y'all see them? Except for this one, which they're like, oh, it's jutting out, son. We're going to have to send it back. I'm like, unbelievable. This will be the 3rd time I'm going back, and I had to get a shot every time. They said, well, maybe you won't need a shot for just that one tooth. So I got them all except for one. One of them's still a fake, an imposter. Unbelievable. All right, so let's see what we got here. Okay. All right. Looky here. We are fairly priced. Wow. Okay. Fairly priced. We got a point of control here. Where's a magnet? We got this that wants to be filled. Yeah. Yeah. Now just see, this is a nothing burger. I don't see anything here. Let's see our expected move chart for the day, for the week. Look at there. We've already exceeded the expected move for the week. We did that yesterday. No, we did that today. We've exceeded the expected move. How about that? Okay. Nothing to see here, boys and girls. Y'all just keep on going on. All right, so the market's down a little bit. Wayne, cry me a river. So let's see what I've been doing some back testing, y'all. How about that? So let's see, we're at 36,991. 36,991. So we're down a little bit. 36,991. 5,223. Okay, down a bit. And our Greeks and the ratios are 37.52. 37.52. I said 37.52. Market go down, deltas go up. Profits we lose, and all of a sudden, look there, we go from 0.10 to 0.14. I guess the VIX is back at 17. And we're using 13,225. 13,225. So we're a little heavy here. We're good here. We're good there. Really nothing to do. Yeah, really nothing to do. Are you comfortable with the rest? Yeah. Now let's see where some of those nakeds were. Let's see, positions. And we got M3s and we got U3s. So U3s are way out there. So let's see, we've got some 3610, 6 of them. Wow. At 17 days left to go. Rough. I'm definitely going to take those off. We're at 94% profit, and we're down $12 on the day. Cry me a river. Right? So let's just take a couple of those off, or all of them off. See if we can get out of those for 580. I mean, for 180. How about 185? Bump them up a nickel, baby. There we go. We're out of those 6. So that bumped my theta down to 42. Let's see what that theta 42 looks like. That's still more than yesterday. Yeah. How about this? I don't even see a need, really, do y'all, to do anything other than that today. You know, we got a 94% winner. That's enough to fire up the wood-sided station wagon to head to Applebee's. So, yeah, I like it. Let's close it. I'm not going to reestablish those positions. All right, let's go to the, what do you call, IRA. Oh, I can take me a nap. All right, so here we are at 84,771. 84,771. So we figure we're down a little bit here too. 84,771. Now, what I like is we're down, you know, $474. The market's down over 1%. If we were down over 1%, we'd be down $847. So see what I like about our little strategy? We normally fare better when the market goes down. We do better than the market. And that's what we kind of like, or that's what I kind of like. Right? Some of y'all may even be up. So let's see if we can do all the math on this garbage. Oh my gosh.
Hey, Bob.
Yeah, hey. Oh, it ain't beta weighted.
Yeah, I was about to tell you that.
Yep. Thank you, Ed. Look at you, Ed. I was talking to Ed this morning. I just, you know, he was talking about how he's going to hug me and stuff. I'm like, Ed, it's really a little too much information. I'm just not really ready for this. So we got 94 here minus 3 there is 91 minus 20 is 71. So say 72, 95. 72.95.
76.
Oh, was it 72 or 76?
Well, I think I calculated 76, but you calculated 72. So I don't know, one of us is right.
Oh God, Ed, you got me worried about it now. Let's go back and see.
That's what I'm here for.
I appreciate that. All right, 95 minus 20, 75 minus 3.
Yeah, it's 95 minus 19, which is
20.
76, right? 76,
yeah, 76
plus 20,
minus 3, so 73. 73.95.
My bad, I didn't see it, the 3 at the top. All right,
come on, Ed. Gee,
I'm banishing myself. I'm
Ed,
going.
are you trying to make up for you having internet out yesterday where you didn't participate? Is that what you're trying to do?
Yep.
Got you.
And not well, so I'm going silent.
No, Ed, don't go silent. It wouldn't be the same if you went silent. 26,650. 26,650. Look at this, y'all. 6,650. Boom, chakalaka, boom. Now this is a pretty account, y'all. Look at this. I mean, you're barely over here. You got enough here. Got enough here. In our trades, we can do some management, can't we? So let's go close some of them. We may roll those out though. So let's go see our nakeds. Unallocated. Our nakeds, we got them at 93%. 93%. So we could take off these 3640s. Create closing order. 3640s at 225. 3640 at 225. That's good. So let's go back up here. 3640s. Now it said I had 4 of them. Well, where the hell's that one? All right, here's 2 of them. So I got out of that at, what was it? Oh, the old memory, y'all. Not only my teeth going off, but my, wait a minute. We got out of the 3650s at 225. 3650s at 225. So here's 4. Oh, there's 4 of them. Got it. 2.25. Okay.
Jesus.
What the hell was that? Like the Lord just spoke from me from above. All right. So 5, 2, 23. So we took 4 of those off. Look at that, y'all. We are a stuff of champions. Load up the car. We're going to Ruby Tuesdays on a Tuesday night because they got kids eat free on Tuesdays, which is always good. So we made us a nice little $588. Beth, how do I do it? How do I do it? So I think what I'm going to do is we closed 4, right? But I mean, my stuff is at it's at where it needs to be. So I don't know if I'm gonna roll 4 out. I think I'm gonna roll 2 out. And I think I have given myself permission to do stuff that Victor was talking about yesterday, y'all. So I've given myself permission. Now, it doesn't mean I'm going to do it, but I've given myself permission. I want to show you what I'm going to do here. I'm going to be a little greedy. I'm going to be a little greedy. I've been selling them for 20. Okay, and I'm going to go to 59 days. Okay. So I'm going to go all the way up to about a 9 delta, a 9% probability of being in the money. And I'm going to sell these, and we won't overlap stress. We'll do the 3640s. I just closed the 3650s. I'm going to do the 3640s at about an 8 or 9% probability of being in the money. So let's see if we can get 1650 for them. And I'm going to do 2 of these. 3640s at 1650. 3640s at 1625. $36.40, $16.25. All right, $36.40 at $16.25. $36.40 at $16.25. All right, let's fill everything in here. So this is MES. We did 2 contracts. We'll say this is naked put 51. Puts naked 59 days. That's a departure from what I've been doing, y'all. I've been doing close to 60 without going under. 5, 2, 23. Now, if I were going to do what Victor did yesterday, well, let's first of all see what our Greeks ratios are. Let's see what our specifically I'm looking at theta. Let's see what our theta is then. So let's put him in his little naked category. Everybody needs a naked category. All right, now let's see what our little theta is. Come here, little friend. Come here. All right, so now we're at 92 theta. Okay, so let's go back over here. IRA 92 theta. 92 theta. Okay, so that didn't change anything. So I probably could put in a put debit spread. Now, remember how Victor did it yesterday. Now, y'all, if you missed yesterday's session, you missed some dang good stuff. I mean, we was analyzing. That's what we were doing. We were analyzing and hypothesizing, and it was just good. It was really good. So remember what he did is he'd say, hey, man, if you're going out to 60 days, right, for your naked, he's moving in about 14 days or so. So he's going into this like 45-day option, and he's doing a long put vertical. Now, y'all look at this. He's doing one that's 300 wide. Holy shimon. So let's get a 300 wide one. Let's see. Let's move this down to something. So 4,100, we could do 3,800, right? 4,100, 3,800. 3,800. You say, Bobby, have you lost your ever loving? No, not really. All right, so what's this? So what we'll do is then he went and moved them down to where we were paying the same amount as we were in the for a 50 wide, right? See if I can do it here. Okay, there's a 950. So that's 3410, 3710 for 950. All right. So let's look at that. Gives you $259 of buying relief, a max profit of 1451, and probability of profit is 3%. But y'all, it's like getting crashed. Look at there, boys. Rough. It's nice. Look at us. Wait a minute. Why did I put it on this account? Hell, I didn't even need it in this account, did I? Anyway, I put it on in that account. All right, so I need to put it on in another account. So let's see. We're 3710, 3410. Let's go here. Here's where we're supposed to do it. 3710, 3410. And we'll go MES. Now, what I like about it too is, You could do one of these for even, maybe even, I don't know. I don't know what I'm thinking actually. PBS 51 puts debit spread 45 days, 2, 23. And we said 47.10, 44.10. Let's try it out. 47.10. So we're gonna go to the 45 dayer. One of these. I already got stuff in here. So 47.10, 44.10. Let's find that. 47.10, 41.10. Good Lord, I'm having to scroll, baby. Is that right? What else? 47.10, 41, 44.10, 47, 44.10. No, it ain't 40.
37.
37.10. What the hell's wrong with me? 37.10. I'm getting old, y'all. It's just, it all starts falling apart. 37.10, 34.10. 37.10, 34.10. Look at this. 10 and a quarter. That ain't right. Let's try to get it down to 10. Wonder if I could do it. 37.10, 34.10. Come on. Why'd I have to pay $9.50 at the other place? All right, we'll go 10 and a quarter. 37.10, 34.10, 10 and a quarter. And we are fit. Let's go over here. 37.10, 34.10, 10 and a quarter. There we go. So we took in $159, $54. Let's put it in its little group. And what's our theta now? 90, 90. Let's see how that looks. 90. Took us down a bit, didn't it? But I bet we're still 0.10. There we go. We're still 0.11. That's fine. I am all fine with that. Let's go put him in his little group. You want to be in a little group, little feller? There you go, little feller. So MES, put him in a group and put debit spread. Ta-da! All right, so let's go to the final account. Crimson account. And over here we are 35,569. 35,569. Not down much, 35,569. Down $142, much less than what the market is down. We like, hey, how come this doesn't have my date for yesterday? Crap. Let's see, Bobby spreadsheet from 4/26. Last modified Friday. Well, that ain't right. We modified it yesterday. Autosave ought to be on, for the love of God. What's wrong? Why's that all? Okay, so we'll miss yesterday's stuff, I guess. 5/2/23. So Greeks and ratios. I don't know why that was all. All right, it's Greeks and ratios. Come here, little kitty. All right, so we got deltas of 46, 47 minus 7 is 40, 43. 40, 43. Wow, that kicked up, didn't it? 40, 43. Oh, yeah. Look at us. Yes, yes, heaven. And our buying power is 12 minus 3 is what, 9 or so? Yeah, about $9,000 in buying power. Oh, y'all, look at that. That is pretty green, green, and baby, it's green. Yes, nothing to do there, I don't think. Nothing really to do. I like how it popped my theta up by, market going against us would lose a little bit. It does inflate our theta, but our theta is our theta. It is truly at 0.12, and that's, it's no need to take additional risk from that. So we look really, really good. Now, we should have caught the market some. Let's see what we're doing. Market's up 6.93%. We're at 4.36%. And see, on these good down days, we catch the market, right? We start catching them. So I fully believe that we are going to catch Mr. Market pretty soon. Yeah, I was doing some back testing. I thought this was interesting. I did a lot of different scenarios. I didn't save a lot of them, but I was just like, just looking at the naked only. And y'all, if you want to play with option omega, in the description below, there's a little discount link for you to get so you can try it out if you like it. So I thought option omega, let's just try it out. And I think I went as long as they could go back. I think I went from January the 1st, 2023 to April 28th, which was Friday. And what I did is I sold 2 puts at 9 delta. Now you can't do it in the futures here, so I just did it in SPY. So I was like doing the 2 of a 112, and I tried a 6 delta and a 7 and 8, and I tried a 9. And I really kind of like the 9 delta. Gives you a little more credit. So I was opening them, most of the time I'm trading around the lunchtime hour, right? So I was opening trades at noon, exiting trades at noon. And I tried various different things like, closing them at 90% profit at 21 days, whichever came first. And then I did just the 21 days, and I did 14 days, and I did 7 days. And the 28-day was really good for these 60-day options. And that makes sense, right? If Tasty Trade is doing 45-day options and they're closing at 21 days, seems to fit me that if we're doing 60 days, we could close at 28. 28 was a really sweet spot, closing at 28 days to expiration. And turns out that from 2013 to 2023, that stop losses did not work that well at all. Now, this doesn't have the put debit spread in it. I want y'all to all know that. This is just the naked puts. And I don't know, it's really, really good. Now you sit here and go, oh, Bobby, but your max drawdown was 97%. Yeah, but we started with, let's see, where did we start with? We started with $100,000, right? So that drawdown is coming here. So this drawdown in February 2020, or February 2010. So it went from like March, it went to 460 down to 400 or so. So that big drop. So I guess what I'm trying to tell you is this thing performed extraordinarily well in and of itself. Now, y'all, back testing, oh, you could back test it. If you change the whatever, it would take, so we're kind of back fitting everything, but it was really good. It just made me think, I think I like the 28-day expiration. Now, if you added like, I'm going to close it at 90% profit, what would that do? Well, it actually made it worse. And then I tried 95% profit, and then that made it worse. And if I tried the Tasty Trade 50% profit, and that certainly made it worse. So I kind of like this, doing a 9 delta, getting a little more premium than the $12 I've been getting on the 2, and exiting at 28 days. I don't know. I thought it was really, really cool. There is your drawdown, right? You get a drawdown, but it was certainly manageable. And look at this. Ever since you got your drawdown here, man, this thing has been nothing but boom, 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 boom. Hey, I am moving on up to the east side. So, did it affect me a little bit? Well, probably, but nothing big. So let's go back. Okay, this looks good. We got a 95% probability profit. I put in that little bit of a big hedge to the downside, and you did see, this was pretty much flat, and that made a big difference over here. Let's look at this trades that we did today. You want to? Let's go back over here. Let's do some analyzing. Let's analyze. So the 3640. Now, this is what was cool about Victor doing it. This is what I really liked yesterday, is that the naked puts are in the middle of the put debit spread. And if you did these in the same expiration, those would not be in the same, hold on, where was that? Trade, did I do the right days on it? Yeah, 59.45. If you did them in the same expiration, your nakeds would not be inside the thing. So let's look at what this looks like. So let's analyze the vertical. Make sure it's all we got. Hide positions. So we've just got the vertical. That should be right. And let's go back here and let's monitor this. Analyze trade. Ta-da! And let's make it MES so we can get both of them. There we go. Hey, kitty, 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 kitty. Let's look at what this thing looks like. So you get a 20% down move. Says you're going to lose $100 on the trade, but let's look at it. What does it look like? What does the old trade look like, Bob? Boy, things just look so much better in let's do it over in the thing here. Let's go 3710. Let's see. Let's build it here. Y'all help me remember this. 3710, 3410, 3640. 3640 at 60 days. Let's do that. Trade 3640 at 59 days. So do two of those 3640s. Just looks better over here, doesn't it? So two of them. And we'll do two of those. Right? And then we'll go and do the 3710, 3410. Now I want y'all to see what it looks like. 3710. There we go. So we're gonna buy that one. And we're gonna go down to the 3410 and we'll sell that one. I said we're gonna sell that one. There we go. No, I don't want two of those. How do I do that? Let's see. Let me do quantity 1, and then I can go down here and go just that one here, quantity 2. Now let's see what we got. Okay, and curve and analysis. Okay, what do we got here? Little friends. There we go. It's kind of cool, wasn't it? Now, this is why we said, hey, did we just create a whole different trade? Is this a 1-2-1 where it looks like you got a little butterfly thingy in there, you know? Now, Victor, is Victor in here?
Yeah, he is.
Victor, were you doing the 1 or 1-1-2? You were doing a 1-1-2, right?
Right, 1-1-2.
Okay. So this is the way yours would look then as well, right? Did I do everything correctly the way you were doing it?
Yeah, looks about right. Yes.
Okay.
Do it at 9, around 9 delta for the naked, and then whatever comes up at 300. Yeah, so it's right.
Yeah, but this is kind of what I liked about it, Victor, is that the naked, when you do that, kind of diagonalize them. It, you know, it puts it in the kind of in the middle of your put debit spread. I really like that. That's really
Right.
good protection.
Yeah, you really want the long one to be in front of the short puts, because that kind of gives you the good profile. Otherwise, it kicks in too late, probably.
Yeah, and so everybody, if when we were not doing that, if we were both in the same expiration, here's kind of what it looked like, right? It was like our naked was in front of our put debit spread, but here we can go.
It will still give you protection. It will just kick. It would kick in later, so you would need a larger pullback to materialize. But yeah, so looking for optimal now. So this looks closer to optimal.
So I really like that. Anyone got any questions on this at all? Any questions how Victor was doing this? I really like it. I like it a lot. PT says in their book, to close them about halfway to days for so 28 is almost right on for 60. It is, isn't it? Obi, it's really good. I doing all the back tests, I was just impressed. I was like, wow, the 28 days is beating the heck out of the 21 days. And you know, so I think we've got some good little best practices in there. I'm excited about it anyway.
Bobby, could you figure out what percentage of the credit were you able to keep if you take it off at 28 days?
Yeah, let's
Say
see.
for 100, how much you actually kept? And the reason I'm asking is because we still have to pay for these put debit spreads, and you were running it as if it's just naked, and then it looks different. But if you don't collect enough per trade, you might not have. I'm not sure. It depends on how much you actually were able to get.
So it says I was able to capture 69%.
So the capture rate is what you kept out of the credits, like so 70 bucks for every 100.
Uh-huh.
Right. And now if you take out the okay, a little bit on a thin side, I would think, once you add the put debit spread. No.
Mm-hmm. Mm-hmm. So I think that's still pretty good, isn't it? The 69.
It is, especially like if you were spending less for the put debit spreads.
Now, do you know the deltas kind of the, I mean, I guess we could put in the put debit
Yes.
spread too to kind of figure that out, right? We could do a new back test.
These deltas are around 8 and 3 for this. And what you figure out, if you're paying $50 for your put debit spreads, it's always going to give you around -5 delta. So
Mhm.
whenever you start, you subtract you have to end up with, so if you're 8, then at 3, the short one would be at 3, and it'll give you 5 negative. If you start at 10, the short one will be at around 5. That's in
Yeah.
general, regardless of which one you're doing, just
All right,
interesting.
so I've got to figure out how to add a leg. Okay, here's add a leg. So now we're going to buy a put, and you said that was what delta? The
8.
8.
Mhm.
Okay, so we're buying an 8 one, and then we're going to say that one's at about 45 days, right?
Mhm.
Then we're going to add another leg. So then we're going to sell, and you said this one was about a 3 delta.
Correct.
Okay, 3 delta at 45 days there. Okay. And we don't want to use exact DTE, just closest, right? So now we got, now interestingly enough, say here's, I mean, I may need to do the thing separately because I kind of don't want to take these off at 28 days, right? So I may take off this, sell into the put. We've already got that information. We know what the sell into the put does. And I think I've got it on a, hold on. Let me do a little screen capture here. Get a screen capture of this. So we'll
Is
know
that
what that.
to take the trade off at a certain percentage or at a certain point? Because these, I would imagine these put debit spreads, you would usually, if you have to take them for profit, you wouldn't let them run. You would take them at some point, let's say for 800 or for, when they're actually working.
Yep. But I think for the purposes of this, let's just pretend that they're just held through expiration. Yes, you're certainly right, though. If something were closer to 100%, we take it. But let's just run this and
You're
see.
showing that they're held until expiration, then every single one of those will lose. I mean, maybe you get lucky in a couple expired profitable in like during COVID, but
Mhm.
if there's no management, then you're
Okay.
essentially
I agree.
you're
I would
going to
agree,
have
yeah.
a flat back test, or it's just going to show that you've spent $50 every trade.
I got you. So what do we want to do then? Go use
80
profit target,
80% maybe.
Okay, 80%. I can do that. 80%.
Just guessing, it could be different, but it's probably better than 100.
Okay. And is that going to do it? Profit target 80%? I think that's going to do it, right? So let's just see what this thing is like. Now, it does take a while, y'all, for the wheels to turn, but we'll just kind of see what this does by itself. I love this back testing stuff, though. It's just kind of fun. I don't put a lot of weight into back testing, but sometimes it does influence me, you know, as to some of my decisions. I go, oh, okay, who would have known 28 is better than 21 days? Go figure. Let's see what this whoops out. You know, the guys did a really good job with this option omega, though. It's really kind of cool. All right, what does it say? Largest drawdown, 100%, da-da-da-da-da. Average winner, max loss winner. But, I mean, you know, here's what's hard to back test something about this, though, is that it's, you know, it says, geez, Lord, we lost all our money in no time. It's hard to back test you know, what happens with an entire portfolio, though. I mean, this just seems like, oh yeah, you did $100,000. Let's put 20% in of your account every trade, and yeah, before long you don't have any money. So there's got to be a better way to do that to get the results, to see when this thing would have kicked in or something. And that allocate 20% of the portfolio is probably where the issue is. But nonetheless, I like going back to the test, and the one that I liked was, which is the problem with back tests anyway, is this one. Here's the one that was great, right? Hey, you put on your 9 deltas, you swap them out there, you close them for 28 days, bada bing, bada boom. You're going to win 90.6% of the time. CAGR 32%. So 69% capture rate. And then, yeah, we're going to pay a little bit for our put debit spreads. But what our put debit spreads do, they should help us with this max loser, right? And I think it helps us to hold our positions. I love that equity curve. I mean, this is the COVID crash didn't look like anything, you know?
I'm confused how this is avoiding the COVID crash because there's no hedge or built-in protection or anything. And I don't know, it seems a little too good to be true considering there's no protection on. We just magically avoided the COVID crash. Would you disagree with that?
No, and I think I don't disagree with that. I mean, that's why I'm
I
sitting
think-
there thinking there was a drawdown. It just let's look at the trade log.
Bobby, I think the reason is because you're only putting a small part of your portfolio at any given time. So even in a crash, you were only in with, let's say, 20%. So, and that probably wouldn't be realistic if in a normal trading, you would have more in.
Mm-hmm.
So that would be like the equivalent of us trading, you know, a tenth of the size that we are now. And we know that we're not doing that. So it, yeah, might not be realistic.
And I was thinking the same thing, like if you look at your drawdown in 2020, above, you know, the big red bar down, it's like a 90 something, no, go up some more, up. Well, maybe you can't get too far. It's where it shows the drawdown. Where was that, Bobby?
Let's
Maybe
see.
on the summary page. Go to the summary.
Oh, yeah.
Now look at, see, look at your 2020 drawdown. It's like 97%. How could that be reflected in that chart right there? It's just, I don't see it at all.
I think it's 97% of the initial investment of 100,000.
Yeah, that's what I thought. It's 100,000, and by this time you're up at, you know, 400, 500,000.
Okay.
But if we follow this practice now,
Mm-hmm.
say we start it today and then World War III kicks off in 3 months, it's not going to matter because we just lost 97% of our portfolio. The only way this works is if you have a huge cushion that you've built up off of and you don't increase your size. because with, I think this is what Ryan was talking about. The position size doesn't increase as your portfolio increases.
Yes, that's true.
So you're sitting on a nice cushion. You took your $100,000 to like $400,000 or $500,000. You didn't increase your position size, and then the COVID crash didn't really impact you. But that's going to look way different if something happens a few months from now, because we don't have those profits and we don't have that smaller size.
So I think the lesson here is, okay, yeah, this looks good, but you know, you can't just do this, right? That's why we've got to have the put debit spreads. That's why we've got to have the hedges.
Right. And those come at a cost and different management.
But something is,
So it's going to change. It's not going to look quite that awesome.
Right.
Are you closing your naked puts on this back test at like 30 delta? Is that criteria in there?
No, this is just closing them at 28 days. Put
So
them
this,
on at closer to 60 and let them go to 28.
so this wouldn't account for any like personal circuit breaker where your account's down a certain percent and you close everything, or they hit 30 delta and you close. So you're essentially saying, I'm holding these until 28 days no matter what.
Yes.
Which
in this
we've all
back test.
decided is kind of scary.
It's kind of scary and we probably wouldn't do it. Exactly. So I kind of like it in that, okay, it gives us kind of an idea of that it's, you know, a best case scenario of how to handle, you know, the individual trades. But at the same time, I like those shutdown metrics that we've kind of developed too. You know, if the count of the market's down 5% in a day and things get crazy, you know, hey, step aside. Let things, you know, because I think what we got to do is we got to keep everything in as a positive expectancy, right? We just can't let things just totally go against us.
And the one thing I noticed is you're allocating 20% of your portfolio on the maximum, you know, and during the COVID crash, you were down 25% of your portfolio value.
Mm-hmm.
if you don't mind me jumping in as well,
Sure, Victor.
something is really strange. If you look at the CAGR, it's at 32.8%. That just doesn't make any sense. That would be like beating everything. If this is correct, like, and you're allocating 20%, only 20% to get this return. That just, and that's one thing. And the other thing is, if you go back down to that, the chart of the return, even though we're only assuming that only 20% of the initial stake you're putting in, look after the COVID, how steep the line is. Something just, I mean, it couldn't be that steep if you didn't change the sizing of your trade. Would you agree? Because you go from 100,000 to 1.8 million. That's 18. That is, I think we're doing something wrong, because that CAGR, that return, average return, that would you agree that just outrageous?
Yeah, I mean, it doesn't look right. What would have caused this to, you know, exponentially increase compared to the slope here?
It's increasing the number of contracts as your portfolio value gets higher. So it's allocating 20% of your portfolio, so you can put a whole lot more contracts.
Yeah, so it is sizing up because we're doing 20% of the portfolio. Portfolio size goes up, it's putting more trades on.
So your maximum drawdown was only 25%, or a little more than 25% of your portfolio value. You went from 460,000 to, what was it?
Let's say 460, and then so you lost 60,000 there.
Yeah, you didn't even lose 25%.
Right, but where's then the 90-something% drawdown coming from?
Because it's comparing it to the initial investment and not the total portfolio value.
Okay. All right, then.
I mean, if you started with 100,000, you still probably would have only had a 25% drawdown. You wouldn't have lost the whole 100,000 because you wouldn't have had as many contracts on.
Can I ask a question? How? Do you use this program? Do you know for sure that that's how this is calculating it?
No, but it's, I mean, he's got 20% in of the portfolio value. So if your
I
if
just
your
don't
value
understand.
portfolio value goes up, they've got to put on more contracts.
I agree with that. What I don't understand is how it can go from 400,000 with a 20% max portfolio allocation, which would be 80 grand. And if 80 grand was on the line when COVID hit, I think that's an account wipeout plus. I don't know what I'm looking at here because I don't have a ton of experience with this program. I'm just kind of commenting intuitively. If you told me for sure, yeah, that's what this program does, it looks at your initial, and that's what it's measuring on these drawdowns. But to me, if you're growing your account and you're continually using that 20% on a higher and higher and higher net lick, and you go into COVID or any other debacle with a 20% buying power and no stop, to me, it's almost not a blow up. Anyone, can the angel chime in with his thoughts? How about somebody else? Even you, Hal, does that kind of seem to make sense to you? Like, how can that be?
That's exactly what I was trying to bring up earlier. There's no hedge or anything built in here. So we are selling naked puts, no hedge, no stop loss, no protection, no circuit breaker, nothing, using 20% of our portfolio, and it somehow doesn't blow up during COVID. That just doesn't make sense to me. That's what I was trying to figure out. The back test looks like it didn't account for something, or it's just too good to be true to see an equity curve that looks like that.
And I agree. I just don't see how this can be right. There's some kind of missing piece that we're not understanding. Particularly if you continually allocate 20% of the growing portfolio. If you had a $400,000 portfolio and you took 20% of the original 100,000 and you only had 20,000 allocated at any time on a $400,000 portfolio, maybe that would survive okay, but what kind of return are you earning? Like barely anything. You got a 5% buying power being used on current net lick. That can't be producing too much. Like maybe 0.5%.
Are you still in class?
I was trying to find option Omega. I can reach out to the guys and say, hey, can you come on with us and make sure we, we're understanding this correctly. So I'll send them a message and figure out what's going on. Yeah, I don't want to just blindly believe it, But it sure through the back test, it surely back tested well.
Isn't it showing the number of contracts in those trades?
Let's see.
Like 30 legs, 32 legs.
Legs 32, May 15th, 250 puts. Sold to open, 251 credit. 4, 32, 30, 30, 32, 28. Let's see what we end up with at the end. And you've got some, you definitely got some losses here in 2020. Let's see what we're in. Oh, wow. So legs 100, we get up to 100 of those. Why would it only do 4 on the 27th? Yeah, I don't know how they come up with the stuff, but it's just cool.
Hey, Bobby.
Uh-huh.
It's James.
Hey, James.
How you doing?
Good. How are you?
Good, good. I've used Option Omega quite often, and very good tool. But there's certain information that's not, if it's not put in there right, some of this stuff doesn't come out right. So you limit the number of your contracts. Otherwise, it's going to put exponentially an amount of contracts that grow. So if you say you want to limit it to 10 contracts, then it will do that for you. I'm not sure if you
Tell me where that is. Let's see.
Keep scrolling. Let's see. Well, we have passed it, I think. we'll scroll back the other way, maybe.
Okay. Frequency.
Contracts per trade.
You see, oh, max contracts per trade. Oh, cool. So you want to say what, 10 here or so?
Yeah, you put 10 and then rerun it and see if it's different.
Okay, cool. Max contracts per trade.
Now that's gonna take a while to run it. Looks like we're going over several months.
But you've been using it and you like the back testing that it does and everything?
I really do like it. I go in and I'm able to examine every trade, look at the strikes, make sure, that there wasn't a problem. You can set these slippage amounts. You can set, there's just a lot of ways that you can tweak it to make it to be very, very accurate. I've found it to be very accurate.
Okay, good.
Anyway, I'll get back off of here, but I just want to let you know about the.
Now, James, you are coming to Atlanta, right?
I'm coming.
How exciting is that?
I have a place already settled there.
All right, that is great.
So I'm looking forward to seeing you guys.
We're gonna have a fun time. Yes, we are, Beth. You stifle yourself. She's gonna unload roaches and rats in our room, she said. Unbelievable, Beth. Unbelievable. She jokes and she kids.
I'm gonna put bed bugs in your bed.
She's gonna put bed bugs in my bed. Okay, let's see what this tells us. So now we're at 25.5% return. Max drawdown 110%. What are we seeing here? Abby, I'm in the class, honey.
Something.
So let's go back to the summary. Now that's weird. Why would it show a bigger? Well, I guess it's because we're not as. Let's see. So now this is showing we went from 461 down.
That's almost the same.
To 247. That's almost the same, right? The 460 something. But why would the increase be less? I mean, the drop be more when we're doing less contracts. Now I'm really confused. Interesting. Interesting. Whole thing is, look at this, win percent, 90%. And like I say, it's all, it's kind of like this, less than 5 to 10% of the time, we're going to have the issues, and the issues can be big. It's just how do we manage the issues? Yeah, I'll reach out to Option Omega. We'll see if they can come back on with us, kind of help us out. This is good stuff.
If you see the max loser is $10,000 per lot, and if you had 10 of them on, that'd be $100,000, right?
Yep. Okay. Good session, y'all. So I will see y'all tomorrow.